Most people don't have an income problem. They have a structure problem because two people can make the exact same money, live the exact same lifestyle, and one of them still ends the year with way more cash. Not because they worked harder, not because they were smarter, because they understood one thing. Employees get taxed first. Businesses get taxed last. And that one difference changes everything. Let me show you what I mean. If you earn around $50,000 to $60,000 a year in the US today, you're not poor, but you're also not building real wealth because the system hits you from every angle. Federal tax, payroll tax, state tax depending where you live, and then after all of that, you still have to pay for rent, food, insurance, gas, subscriptions, debt, and life. That's why so many people feel like they're making decent money, but somehow never actually getting ahead. Because as an employee, your money follows the worst possible order. Earn, get taxed, spend what's left. That's the trap. Now compare that to how business owners operate. They follow a completely different sequence. Earn, deduct legitimate business expenses, then pay tax on what's left. That's not a loophole. That's the system. And most people never realize the game is not just about how much you make. It's about what vehicle your money flows through. That's where the difference starts. Let's make this practical. Say you earn $60,000 a year through your work. If you earn that as a normal W-2 employee, that money lands on your tax return as personal income first. You don't control much. You don't deduct much. And by the time taxes and basic living costs are done with you, the amount you actually keep can feel embarrassingly small. But if you're legitimately operating through a business, whether that's an LLC, a limited company, or a contractor structure, depending on your country, the math changes. Because now the income hits a business first, and businesses are allowed to deduct real, legitimate costs tied to generating that income. Things like your laptop, your phone, software, travel, equipment, part of your home office, professional services, education related to your work, and other valid operating expenses. Same income, very different tax treatment. And this is the part most people miss. The wealthy do not just focus on making more money, they focus on making money more efficiently. That's a completely different mindset. Because if you make more, but your structure stays broken, you can scale your income and still stay financially stuck. That's why some people earn six figures and still feel broke. More income does not automatically mean more freedom. Better structure does. Now, very important. This is not me telling you to fake expenses, commit tax fraud, or pretend your personal life is a business. That's stupid, and that's exactly how people get wrecked. This only works if the structure is real, the work arrangement is legit, and the deductions are actually defensible. But if you do have income flexibility, meaning you freelance, consult, invoice, run a side business, create content, do agency work, design, coding, sales, marketing, media, or any kind of independent service work, then this matters a lot. Because in many cases, the biggest financial upgrade is not making another 10 grand, it's stopping your current income from leaking so badly. That's the real unlock. And this is where people get trapped by bad advice online. A lot of creators sell this like it's some magical tax hack. It's not. It's a structure advantage, and there's a big difference. Because the real move is not, how do I avoid taxes? The real move is, how do I stop earning like an employee if I'm already thinking like an owner? That's the better question. Because once income starts flowing through the right structure, you gain leverage, you gain control, you gain optionality. And control is where wealth actually starts. Not with income, with control. So, what are the real ways people use this? There are three common ones. First, if your work can legally be done on a contractor basis, some people move from being directly employed to being paid through their own company or business entity. Same skill, same output, different tax structure. Second, a lot of people already have side income and don't treat it seriously enough. Maybe it's content, maybe it's freelance work, maybe it's consulting, maybe it's digital services, maybe it's online sales. That income should not be handled casually if it's becoming meaningful, because once money starts coming in consistently, structure starts mattering. Third, some people already own a business, but they still pay for too much personally. That's where they lose, because if the expense is genuinely tied to producing income and it's allowed in your jurisdiction, then paying it the wrong way is just inefficient, and inefficiency is expensive. That's the whole point of this conversation. Not greed, not hacks, not flexing, efficiency. Because most middle-class people are not being destroyed by one giant mistake. They're being drained by thousands of small structural disadvantages they never learned to fix. That's why this matters so much. And if you really want to simplify this entire video into one sentence, it's this: employees get paid and then taxed. Owners get paid, structure the money, and then get taxed. That one shift is massive. Now, obviously, every country has different rules, and even inside the US, your state, business type, income level, and worker classification all matter. IRS rules on 2026 brackets, the standard deduction, and worker classification are specific, and if you get the structure wrong, the tax savings can disappear fast. So, no, this is not legal advice, and no, this is not just open an LLC and pay no tax. That's low IQ internet content. This is about understanding a principle that rich people have used forever. The game is not just to earn money, the game is to route money intelligently. That's how you keep more. That's how you build faster. And that's how two people making the same income end up in completely different financial realities. Same effort, same money, different structure, different outcome. If you want more videos like this, real money psychology, real systems, real leverage, subscribe. Because most people are trying to earn more before they ever learn to keep more. And that's why they stay stuck.